First time homebuyer mistakes, tiny red mic edition. I'm going to see if this improves my sound quality, which I'm hoping it does. But we're going to get into it. The mistakes I see a lot of first time homebuyers make after they get pre-approved, even before they get pre-approved. So we're just going to jump right into it. But before I begin, please like, subscribe, and share this content if you find this helpful. So the first mistake that I see a lot of first time homebuyers making is maxing out their credit cards during escrow. Okay, you guys have to understand that after you guys get pre-approved, you cannot do anything regarding your credit because that creates a whole web of issues, and you will definitely not be qualified for that same purchase price if you cannot even pay off those cards. So just make sure you know what you're going to get into as far as using up all your credit cards, okay? Because that is a definite no-no, and please don't do it. Basically anything to do with your credit, just don't do it after you get pre-approved. I promise you it's really not worth it, especially if you're just trying to buy your house. The next thing is making large unverifiable deposits after you get pre-approved. Okay, that is something that you cannot do because we need a paper trail. Ever since that whole fiasco with 2008, and I'm sure you guys know that, right? We unfortunately cannot just use the cash that you have in your bank account unless it's been seasoned in there for 2 months, right? So if it's been in there for 2 months, we do not have to ask about it. However, after you guys get pre-approved, you make a huge deposit, which is 50% or more of your income, then we have to ask about it. And if you cannot source it, then unfortunately your loan will have to be denied. So please don't do anything like that, okay? Please just consult your lender. They're trying to help you guys buy that house. So please don't do anything that's going to jeopardize you guys getting into that house, okay? Please, please, please just don't do it. Okay, another big thing which ties into the credit, but it's making big purchases in the middle of your transaction or even after getting pre-approved, okay? Or even before getting pre-approved. Please don't make any big transactions like getting a car, buying furniture. I know you guys are excited to get into that house, right? And you guys want to buy some new furniture with a credit card. But unfortunately, we aren't unable to get you guys qualified that way, okay? If you guys make a big purchase like that, that adds to your debt to income ratio. And unfortunately, if your debt to income ratio is too high, then we won't be able to get you guys into that home, okay? So please keep this in mind. Don't make any purchases like furniture or a car until after you guys close on your transaction. That is the biggest thing. Don't do anything until you close on your transaction. That is when you can start buying all those cool items for your house. Get a car, a brand new car to go with that brand new house, right? Just don't do anything to jeopardize yourself, okay? Another thing as well is do not quit your job after you get pre-approved and don't plan on getting a new one, okay? Or even after you guys get your offer accepted, please do not quit your job because that is not going to work, especially if we have to verify your income and where it's coming from in order to close on that house, right? So just because you get pre-approved, that doesn't mean you guys have the house yet, okay? That just means that you are pre-underwritten in order to get into that house. So the underwriting part still has to happen when you guys are under contract for your home, right? So they're going to verify your income again, exactly what I did in the very beginning. They're going to look at your debts, look at that credit report. They're going to verify your assets again. So everything that I did up front, they're going to do again once you guys get under contract. So please do not do anything like that. Don't quit your job. If you have to quit your job, but get into another W-2 like position right away. And we also need to see 30 days of pay stubs from that new job. And we need an offer letter. And we also ideally would like you to be in a job that your income stays the same or increases. So if your income decreases after quitting that job and get into the new one, unfortunately, that's going to hinder your pre-approval and getting into that house as well, okay? So all of this stuff that I'm telling you guys is basically after you get pre-approved and then once you actually get into contract under a home. You don't want to do that. Did I say under a home? You don't want to get into contract under contract. Okay, anyways, let's just move on. Okay, the next thing, you guys, is buying at your max purchase price. Okay, I see it all the time. I see a lot of first time buyers, they get really excited and see the big number that they're approved for, and I always emphasize with them, look, this is your max of what you guys can get approved for, but that does not mean that's actually what you should be buying. Okay, I like to at least correlate the purchase price with the potential payment, so at least you guys know what you're getting into. And then I will give you guys a pre-approval letter with more like your budget. And your budget, I will show you guys what those look like and the numbers. But I know a lot of you guys, you know, you can do what you like with your own money and your own whatever, right? But I want you guys to keep in mind that when you buy at your max, that potentially could make you house poor, you know, because we have to factor in that mortgage payment to go along with that house price. So if you guys are buying at your max, that's going to stretch out your money pretty thin. So just keep that in mind, okay? I'll still make sure to go over that information with you so you know what you're getting into. But at the end of the day, you guys make your own decisions, but please do not buy at the max that you're approved for because of utility bills, right? Other expenses besides the house. The last thing you want to be is house poor. I'm telling you guys right now. And another one, please do not go from W-2 income to self-employed income if you're trying to buy a house pretty soon, okay? The reason being is that we can no longer qualify you from the W-2 income. So if you guys switch over from W-2 to self-employed, we need to see now 2 years of your self-employment history. If you guys do that, then unfortunately, right, we're not able to get you approved anymore. That disqualifies you. So if you were approved under W-2, then you switched over to self-employed, we're not going to be able to help you guys, okay? So please, if you're going to be doing a W-2 switch over to a new job or anything like that, it definitely has to be another W-2 like job, ideally in the same industry. So this ties along with basically the new job thing. That's just something that you guys want to keep in mind. Please don't do any of these things when you are getting pre-approved, and even after getting pre-approved, you get into that new house, okay? These are one of the biggest mistakes that I see happening. So please just don't do that and just be smart, which I know you guys are. And yeah, I will leave my Calendly link below if you guys want to book a consultation with me. I am licensed in several states. I will put the states down below in the description bar. If you guys like this video, please like it, subscribe, share, like I mentioned, if you found this helpful. And I'll see you guys in my next video. Bye.